Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
Nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, good morning everybody. Welcome back to another live stream. Hope you're doing well. Hope you're staying safe in this wild market. And we have a lot to talk about today. Actually, we had a lot of PMI data this morning. Let's pull this up. Some people in our Discord chat were asking me this morning if I could take a few minutes to go through what we saw out of Europe this early morning for me, which was essentially some pretty weak PMI data coming out of Europe. It has gold moving higher, which makes a lot of sense as central banks in Europe cutting rates does impact gold prices positively. If we think about this for a second, a weaker economy typically prompts central banks to ease monetary policy to essentially make things a little bit easier on the economy. And we've got some prints here this morning that show some weakness in the European economy. Let me show you some of those specifically. When we take a look at French services and manufacturing PMIs, both missed expectations and are below 50. Remember, 50 or greater is considered strong or is considered positive growth in those parts of the economy, whether it be services or manufacturing. And a print below that is considered weak. Well, right off the bat, Europe, German, French readings were just weak. They're all under 50 and under expectations. Then you have, so here's Europe specifically, right? Weakness. PMIs for GBP. This is the UK's numbers. Both missed expectations. Services PMI was at 50, which was below what was hoped for by analysts at 51.9. The way to read this, guys, and this is why I love learning data from the PMI. What does that stand for? And why should you care if you trade Forex or gold or if you trade indices? Why does this matter to you? Well, this is a really big, important story to the price of gold. I'll tell you why. Weak data. What does PMI stand for? It stands for Purchasing Managers Index. Imagine if you got a surveyed response from a bunch of very important decision makers in the business world in Europe. And you ask them questions like, do you plan on hiring people? Do you see sale orders increased or decreased? What's your outlook basically on the economy? And you took their surveyed response and indexed it And that's what we get out of PMIs. It's incredibly useful. And what this is showing us is confirming some of the theories that we've discussed on the show, which has been weakness in other places in comparison to the US. What you could also point towards is that perhaps some of the sentiment is also down because Europeans may be a little bit nervous about what US tariffs are going to look like next year. Remember that Europe is a huge trade partner to the United States. And if the US imposes tariffs on imported goods, that could be scary to Europeans. It could be scary to, maybe more so scary to, places like China, et cetera, but also scary and a bit concerning to these places. So there could be a little bit of that negative sentiment, uncertainty building into this PMI read. That being said, we have a very standard response to this. The dollar is up, right? Dollar looks strong relative to the weakness that we're seeing out of Europe in their economic data prints. We can also see a very standard response to uncertainties in economies. Gold is up today. Again, this marks the 5th straight up day for gold. 1, 2, 3, 4, 5 days up. This is why fundamentals matter so much. If I only traded off of technicals, I showed you guys this earlier this week. If you're an everyday stream viewer, you know I discussed this. I pointed out that this technical level looks really interesting, in my view, for possible sell side if I could get a confirmation from the edge finder. But that second half of my sentence is everything. We did not get confirmation from the edge finder, and weakness in PMI data is a positive catalyst for gold. We have more PMI data coming out of the United States shortly from now, and those data prints will be very important as well. If you get PMI data that is confirming more weakness, even in US, then you might start to see gold really start to rip, right? It looks like gold had a big pop and is now consolidating or waiting here on the lower time frames to see what comes out of the United States. We get those data points out of US in about 15 minutes. So we'll see. If PMI numbers come out good for the US, what happens to NASDAQ 100? Does it go up or down because it brings high inflation? Nathan, that's a great question. Generally speaking, I would say it brings it up. That's the way we've programmed our system. So when we go to NASDAQ, for example, in fact, let's just do this. That's exactly how we've programmed our system. So PMIs better than expected are a positive score reading on the S&P 500 and the NASDAQ. And when you get lower than expected numbers, the way our system is programmed, lower than expected will then be a bearish score for the S&P and the NASDAQ. You see how we do that? So our system, the reason I got to say why the Edge Finder is so popular is because trying to remember and to do all that stuff off the top of your head all the time and trying to remember all the different data points is near impossible. What our system does is it looks at incoming economic data like PMIs, like GDP numbers, like CPI, like NFP. It looks at all these data points and it categorically assigns scores to every asset that we trade, so that by the time we show up at the desk, the system has already calculated a general bias on each of our favorite charts. Does that make sense? If that explanation, especially for some of you guys who are already Edge Finder users, if that made sense, if that was helpful to you, do me a favor, just type yes in the chat. Let me know that explanation made sense. We are looking at all of the economic data here, guys, and we're looking at the actual versus the forecasted. Then we look at the change relative to one or the other. If we were expecting big GDP growth and we got less than that, it assigns a negative score to the S&P 500 because, again, GDP growth is important for stocks. Stronger growth in the economy is going to lead to better profits most of the time. So that's how that functions, right? You can't do all that stuff in your head. I mean, you could do this by hand. I used to do it. It took me forever, all the time, to try and do this by hand. I'd get out a spreadsheet, and I know there's some people who do that every day. I know some of you guys are like, well, I don't want to buy the Edge Finder, so I do it in the Google Sheets. That's cool, but I gave up at some point doing that because I used to do it by hand and it was too much work. It was every day, so much work to try and categorically calculate scores for everything every single day. So we automated the process and the Edge Finder was born. And that's why A1 Trading is a software business based out of Atlanta and why we have so many people using our tool. And Mohammed asked, how much is the Edge Finder? Well, usually it is $1,400. It's a one-time payment to get access. However, it's Black Friday. And with Black Friday, we have our biggest discount of the entire year. It is currently 45% off. If you're somebody who wants access to the Edge Finder, that sale is ending. Black Friday is coming up soon. And if you have not already picked up your copy, now is your chance to do so for a mega, mega discount. You save so much money if you do it right now. If you wait, it goes back up to the usual price. 45% off. If you want to lock in that price before it ends, click the link that's just been dropped in the chat. The alternative way to do that is you can go to a1trading.com and you can get the Black Friday sale offer. It's in the top right hand of the screen, or you can chat with us using the chat in the bottom right, or you can click the link that's in the description, whatever you want. No subscription, that's absolutely correct. We do not do a subscription model, and that is because if you think about this, I don't like subscriptions. So when I built the Edge Finder, I was like, I don't want to make people pay every month. What I want to do is I want people who are very serious traders. If you see yourself trading 5, 10, 15 years into the future and you pay the one-time price for the Edge Finder, it is dirt cheap. If you use the Edge Finder for 10 years, it's like not even $1 a day, right? If you use it for 15, 20 years, which we're not going anywhere. We've got a team of people. There's about 10 of us total. We build this stuff every day. We focus on this stuff and we use it for our own trading. We're not going anywhere. If you don't have a copy, again, the price per day, if you use it for the long term, is like, it's like not even $1 a day. What if somebody doesn't like it? Then you don't like it. There's most people who use the Edge Finder, we have a really, really high satisfaction rate, which is awesome. You can pay for a trial. You can pay for 30 days access to try it out. If that is something you're interested in, you can chat with us on our website. That's awesome. I'm glad you took advantage. Again, it is the best time of the year to do it. Everything is on super sale. Nikkei's higher here. Russell's up a little bit. Dow Jones pretty much flat. All the indices are flat today. They were down a little bit, but have come back since. Bitcoin down 0.8% here this morning, which surprise, to be completely honest, that's basically flat for the day. Bitcoin was trailing higher in the overnight session and then gave back some gains here this morning. And in about 15 minutes, guys, we get US PMI data, which will be really interesting to see. Gold jumped on UK and European PMI numbers and then gave back some of those gains here. I think that this is probably gold prices just normalizing ahead of US PMI data, which will either confirm the slowdown globally, or if it's more of just a European problem and the US looks strong, then gold will likely come down more. So we'll see. Gold prices here on the daily chart. Again, I don't really love the price action right now. If I was only a technical trader, I would be a little bit more bearish, but I am not only a technical trader. And if I go take a look at the gold and silver scanner, you can see we are just smack dab in the middle, -1 score. That does not give me any sort of strong enough confirmation to go long or short gold. I was actually hoping that this would give me a bigger discount. I was interested in potentially, specifically selling some puts on gold miners. GDX is the ETF that I like to trade sometimes, but didn't quite keep going. So gold is still just hovering around back and forth here for now, not really giving me too much of an opportunity at this time. I am still long indices by proxy. I'm long SMH, which is an ETF that tracks a lot of semiconductors. NVIDIA earnings, I would say, were very good. Expectations are just incredibly high for semiconductors in general, but especially the leader, right? NVIDIA. NVIDIA is flat on the day. Google is a stock that I own, which unfortunately took a big hit the other day. However, the positive here for me on Google, I got to say, is that I did what is called selling a covered call. And if I show you this, if I go to just my options plays here really quick, you can see that I own Google shares, and you can see I'm pretty much flat on my Google shares. I own Google shares at $163.45. But what I did is I sold calls at 175. So with the big sell-off yesterday, the one positive for me would be that these calls are now much less expensive. And because I sold the call, aka I shorted calls on Google, even though I own some shares, I've created a $415 profit, let's call it, with just a couple days left on the option. And I've been doing this a lot when I see stocks that I like or that I own going parabolic. I have been taking it as an opportunity to actually sell covered calls. I did the same with Tesla. I own Tesla shares. I sold a call out until the end of the year, 490, one contract, which means I can make a maximum of $490, and the calls are way out to a 420 strike price, which basically means that I will make $490 on Tesla if it trades anywhere below 490 by the end of the year. If it goes absolutely parabolic, then what will that mean? Well, that will mean that above this price range, up in this area, I will not make any additional profit. Since I own 100 shares over here, and I've sold a covered call over here, what I've done is I've sold the rights to the shares or sold a call up above this level. So any above this price, I do not see any of the benefit, but anywhere below that price, I get an extra $490 of yield. So not bad. But I feel like that's a reasonable thing. I don't really see Tesla making a $80 move by the end of the year. If it happens, then great. Edgefinder, the money spent on the Edgefinder is nothing in comparison to what it can help you make in the long run. Lee, I mean, that's the thing. I 100% agree. It is not going to make you endless money by any means with no effort. But if you're serious about trading and you use it, I mean, I've found so many excellent trades with the help of the data that I'm using in the Edgefinder. It's incredible. It adds confluence, it adds insights. And let's be honest, if data is not easily accessible and readable to you, you're probably not going to look at it, and you might miss a lot of things. So the Edgefinder, with a practical approach, a profitable trader using it, using the insights to the full advantage, it theoretically can pay for itself. So we'll see. We'll see what happens with NASDAQ, S&P, etc. here. Do you know any successful, mostly price action traders with some but little fundamental influence? There's Marco who comes on the show. He's purely technical. He's sent me his MyFX book, and it's legit. But most traders do not show. This is a rant that I go on once a week at least. Most traders that you follow on social media, they don't show you any proof. And I do, but I don't say it as a way to like be like, oh, I'm better than the rest. There are many profitable traders on social media. They're just oftentimes not the ones you think. They may not have large followings, and they may not be, they're probably not, big flashy traders and people that you see on social media. Most of those people are marketers, right? There's nothing wrong with being a marketer, but what I do find error with, what I find an issue with, is marketers you can be a marketer and a trader. I'm a marketer and a trader. The difference is you've got to show people that you actually trade. And if you can't do that, then you're just a marketer. And I don't have any respect for that. Right? If you don't prove to people that you actually trade, that you actually are profitable over the long run, and you're just a marketer, then you're only serving yourself. You're not bringing any value to the community. And if you have a platform and you're just using it to enrich yourself and not actually share any value, but you're selling stuff, I find that to be really dishonest and immoral. But if you are able to show profitability in what you do, and you also are a marketer, you sell a service, in my case, I sell software, right? I build software tools and I use my platform to sell. There's nothing wrong with doing that if you can prove profitability over the long run. My trade not working out so well right now is actually Chinese stocks taking a little bit of a tumble here, down 2%. The Hong Kong 50 here, or sorry, the Hang Seng index down here. I took a long position. What I took was MCHI. It's the iShares MSCI China ETF. I'm down about $1,250 here on this position. So this one is not working out so far. So I'm down. I'm not exactly sure, but I also sold puts on BABA, Alibaba. This is probably not. So let's take a look at Alibaba. I sold puts on Alibaba, which means I am essentially agreeing. Okay, yeah, we are very much these puts that I sold are what is called in the money, meaning the puts themselves, whoever bought the puts is in profit. I sold the 85 puts on Alibaba. That is, think of it as the Chinese Amazon. In other parts of the world, Alibaba is a heavily used service, similar to in the US and Europe and et cetera, how everybody uses Amazon. Well, I sold puts at $85 per share. What that means is that if at expiration date, this thing is under $85 per share, I will have to buy 100 shares of Alibaba at $85, regardless of where share price is. So if share price is at 76 at expiration, and its expiration is the 20th of December, I will have to buy 100 shares at 85, meaning I will immediately be in a loss of that amount. So I sold these puts recently. So here is another trade not working out. So I've got two Chinese stock plays that are not working out currently. But this is the difficulty when Chinese stocks had this massive run up, this ginormous drop. And I was thinking, perhaps incorrectly, we'll see, that this level could actually hold, that the 61.8% retracement could hold. But the other thing is, it's down a little bit. It's not hitting my stop loss at this time. But part of the reason here is, or that I like this trade, is that I think that this big run up, which happened on stimulus announcements from the Chinese central bank, we've seen that really fade and some of the enthusiasm fade after that. But I think that could be, and I could be dead wrong about this, I think it's just a pullback before there is some more serious play towards stimulus, getting things going in mainland China again. There's a lot of uncertainty, though. That is a high risk idea because there's also the tariffs uncertainty with the US. Is the trade war going to kind of kick back up again that we saw in 2018? There's risk to the Chinese play. So it's not a big position for me, but it is a position nonetheless. And it is a trade that I'm currently in that is not looking so hot. So we'll see. I will cut the trade if it breaks 45 on MCHI. That is the equivalent on the Hang Seng index of 18,485, let's call it. U.S. stocks, meanwhile, slightly up on the day. Look at that. The Dow Jones looks really strong, guys. You know what also looks really strong? The Russell. You guys see the Russell? Russell seems like it does not want to quit. I know a lot of futures traders love trading the Russell. Russell's looking really strong here today. Gold also up 0.9%. We've got US PMI data coming out here in just a moment. Also, guys, PMI data, 40 seconds to go. Well, they already revised a number. Revise this number higher. With 30 seconds to go, we will see how this impacts the charts. Let's go ahead and roll our quick breaking news. Seems like that revision already has the markets moving. 10 seconds to go. Let's see what we've got for PMIs this morning. Again, Europe's was weak. Let's see if US bucks the trend or if it too is also seeing some weakness. Should be coming in just a moment. And again, the market already kind of moved ahead of time because some of the revision numbers actually dropped before the release time. All right, so we have 48.8 for manufacturing, came in exactly as expected, but they revised this number higher. And there is services coming in strong here this morning. So services numbers strong. There goes the industrial heavy S&P 500, NASDAQ, Dow Jones. Look at that. Russell also seeing some upside move. I mean, these aren't huge moves. S&P is up 0.34% for the day, but went from red to green here this morning. So a bit of a reversal on the day. S&P up 0.4%, NASDAQ 0.3%, and the Russell just absolutely flying here, up 1.1% just about this morning. And yeah, this is going to be a little bit of a muting effect for gold, most likely, just because, again, strong economic data out of the U.S. may reverse some of the uncertainties that came with slow European numbers. At least right now, it does still seem to be a favor the U.S. trade across the board. U.S. stocks, U.S. dollar, all seem to be kind of dominant at this time compared to other places. I mean, clearly I'm long some Chinese stocks, which are not feeling this same enthusiasm today, of course. And we'll see how that plays out. I'd love to see if NASDAQ wants to try and make a bit of a run for it here to end out the week, maybe close near the highs again. NASDAQ looks real strong. So do the rest of them. The Dow Jones, I said, looks really, really good. Look at that. Dow Jones closing the gap yet again to the highs. Did Bitcoin get a little bit of a boost off that? No, not quite. No, not a big reaction there. Ethereum's down 1.9% here this morning. I do have my stop trailed on Bitcoin if it does reverse. And this is the question with Bitcoin. Are we going to be a heartbreak moment where it doesn't quite hit 100K and you see the big reversal? I don't know. I kind of think that it's going to go see 100K. I could be wrong about that. And I've got a trailing stop, which will tell me when it's time to get out. But if we can put in some sort of higher low here, rip to 100K, then again, I will repeat the process of trailing stops and letting the market telling me when it is time to get out. By the way, guys, if you don't have access to the Edge Finder, everything is currently 45% off for our Black Friday sale. That is ending pretty soon, so don't miss the chance to get huge discounts, whether you want access to the VIP group. If you want to get the trade alerts sent by myself and my team, you can do so for 45% off right now. It's a one-time payment for that, or you can get access to the Edge Finder or the brand new stock box, which is the stock equivalent of the Edge Finder. If you want more details, have some questions, or just want to lock in that discount, click the link being dropped here in the chat. You can send a direct message to our support team. And now what we're going to do is we're going to take just a quick break. We're going to set up the stream here so that I can speak with Kenzo for some Fundamental Fridays. Stay tuned. We'll be right back.
Looks like we're receiving a transmission. I think it's an alien, which is pretty cool.
Okay, all right, I'll go check it out. Beam me up. Whoa, hey guys, I come in peace.
Hey, you're back. What happened?
Well, they gave me this.
The A1 Trading Stock Box, an advanced market scanner of top stocks, ETFs, insider trades, and analyst ratings. Unbox smarter insights and discover opportunities with powerful data at your fingertips. Get your stock box today with our out-of-this-world Black Friday sale happening all month long.
See ya.
See you later.
All right, we're back with Kenzo. Hey, Kenzo, how are you?
I'm doing great things in you, man.
Doing good. It's good to have you back on the show here for another Fundamental Friday session, and plenty to talk about. We've had quite a bit of market volatility here recently, but stocks mostly have been shrugging bad news off and just continuing to push higher. I know we like to both talk about the indices quite a bit. So what are your thoughts with NASDAQ getting close again to that high, the Dow Jones very close to its all-time high as well? What are your thoughts right now on indices?
Yes, I was focusing actually on NASDAQ and US 30, and they seem to be performing very well. But this week, I think US 30 was performing very great, especially from NVIDIA. It performed very good, but I think we did not really see the overall push because I was expecting a bigger move. But I think maybe today we might close the market higher. It's better than a few weeks ago.
Yeah, it's been interesting just to see the even though you've had some ugly news mixed in there, right? The uncertainty about what's happening in Ukraine, despite some of that shaking up the markets, it doesn't seem like it had enough to really keep things down. The other bad news event that happened this week, at least in the eyes of the market, was the uncertainty around Google, right? The Department of Justice talking about them needing to sell off Chrome, and perhaps that shakes things up a little bit for big tech stocks, because of course those sorts of rulings can hurt their business models to a degree. So I don't know, some uncertainty on that front as well. But do you think that overall, going into 2025, do you think it's something where we see this ramp up into the end of the year, and then 2025 we see corrections, pullbacks, periods of consolidation? Or do you think it could just be strong and then strong again in 2025? Do you see any sort of cool down in the coming weeks or months?
For now, I don't really see that. I think the overall push coming from now, I think we are going to see some overall push to the upside. Maybe we might have some reversals here and there, but I think similar to what we saw from 2020, 2021, especially because Trump is going to be in the office. If maybe he can try maybe to cool off some of the geopolitics or tensions, I think everyone from those countries, they will be focusing on stocks. Obviously, I think we will see businesses or companies performing very well. Yeah, unfortunately, from Google, they have this issues or fines from DOJ, but I think it happens like almost every month from these tech companies. Last month, I think it was April, they have to pay 10 billion, but in Europe. So it seems like they have all these issues, but at the end of the day, that if they fine them, I think it's going to be a smaller amount, maybe 2 billion, 10 billion. So that is actually nothing for them. So, but the overall push, I see a quite bigger move. I think the market is happy.
Yeah, and I know another one is there was some news that Amazon might be getting some pushback from Europe, and just in terms of some restrictions. I'm not exactly sure on it, but let's see if we can find anything on that. Yeah, EU's Digital Markets Act next year. Amazon potentially likely investigation. So I don't know. You always sort of have this little bit of pushback from governments, not just in the U.S., but in places like Europe, et cetera. So it seems to always be a bit of a story, but as you mentioned, maybe not a huge deal for these companies, which have so much money, they can sort of just pay off these events, get past them, and continue to do business and make tremendously more money. So really an interesting story on the stock world, especially those mega cap, ginormous companies like Apple, Amazon, etc. Another question for you, Kenzo, is what about gold? Gold has kind of fallen out of its just straight upward trend that we've seen for most of the year in recent weeks following the presidential election decision. We had a decisive win, and typically an indecisive win is more unnerving for investors, but a decisive win makes people feel like, okay, at least we know what we're dealing with. We know, okay, it's going to be Trump. It's going to be, a Republican Congress majority, and a lot of that is going to be put into place. At least we know that is going to happen. It's not we have a mixed sentiment of who's going to actually win the election, or there's no claims to the election, et cetera. There was a clear winner. That uncertainty getting washed away helped to push gold down, actually. But now gold is ticking back up. We've seen the uncertainties in the Eastern European theater, right, with Ukraine and Russia, some threats of nuclear warfare, which is always scary, not only from a markets perspective, but just a general, humanitarian perspective. It is a little bit concerning. But is gold 2025? If you had to pick a direction, do you think gold is higher or lower in 2025 from where we are currently, around $2,700 an ounce?
Yeah, to me, I still believe it's going to go lower. For now, I think maybe whatever that is pushing gold to go up now, I can see the forecast. It's actually on the tensions, or let's say maybe Russia and Ukraine. Whatever that Biden approved, I think it's this week or last week, and also Britain and France, they actually approved some of the long range missiles and stuff like that. So obviously that creates panic, because it shows that the tensions are just going to go higher and higher. But I think this is just going to be now. Let's hope that they don't push much. But once Trump is in, I don't think we're going to see a continuation of this. So I think it's going to be like a year before we get Trump in the office. This 20 days, 50 days or whatever, they will feel like a very long time. So I just hope, if maybe it was possible, they can just put him now. Then I think all this thing might disappear very quick, even if it's not really going to be in a day. But I think it's more on the peace side than what the current administration is doing at the moment, especially on their last term. I think they were just going to get out with peace, but it seems like they just want to mess things up for Trump, unfortunately.
Yeah, and who knows exactly what will happen within the next few weeks before Trump takes office. It's a pretty serious matter in terms of just that whole situation for Ukraine, but also for the rest of the world as they kind of watch from the sidelines. Big question too for you is that, gold is up a little bit on that uncertainty, but another thing that's up is Bitcoin. I mean, maybe not today, down 1.2% here, but you look back a few weeks, my goodness, Bitcoin is absolutely going parabolic. What do you think on this one, Kenzo? Does Bitcoin, as you mentioned, the Trump administration taking office is an interesting. It changes a lot of things for a lot of different places. But one thing for sure, clearly, with a 30 plus 40% move following the announcement of Donald Trump's victory, has Bitcoin just flying high here. Is that set to continue? Are we going to see with Elon Musk and Donald Trump their sort of cohort crypto just run hot like it did back in 2020, 2021?
Yeah, I think it will. I think it will continue, especially with Musk there. We know that mostly is positive when it comes to crypto. So I think this move might still be quite small comparing to other moves that we saw before. So I think by the end of the year, we will be on 100 plus. I'm expecting to see some serious moves. If maybe they are not going to be specifically on Bitcoin, obviously other cryptos, they will also gain something. But I see it as a positive thing, because few months ago, I also saw Trump on his campaign. He was also talking about cryptos and stuff like that. So I think if he can go soft on the regulations and stuff, we might see the overall industry on the crypto going like seriously crazy.
Yeah, it is crazy times to think that there is even a president at this point acknowledging its existence and giving some validation to it. It is quite a change in times. Not to mention, I think that is the kind of thing, that is the kind of event or change that would get price. I mean, obviously now speaking with price near 100,000, that does seem like the sort of catalyst that could take it to 100,000 and beyond is validation from, well, arguably the most powerful role on the planet. So it is pretty crazy just to see it all happening. I mean, years ago, I would not have expected for that to be the case at this point, but here we are. The future is very hard to predict, and clearly that is why. I mean, many people who have disliked Bitcoin or crypto in general for many years are probably very shocked by this. And I'm not by any means the biggest crypto person in the world, but I'm trading this momentum. It is a very momentum heavy instrument. Do you trade it at all, Kinza? Are you watching it for any trades, or do you just kind of hold any, or what are your ways of playing Bitcoin, if any?
Yeah, not much. I used to actually, I can say I hold some few coins on Doge because it's quite cheap and it also moves very quick. So I think Doge, as also Elon Musk creating this department, I think is going to be like the topic. So not much on Bitcoin. I think I missed much, especially around this level, the time it was breaking out. So I thought maybe it was going to play around, but just as this thing flight, so I did not really want to chase the move. So I just tried to buy and hold some smaller coins actually on Doge and other ones.
Okay, yeah, fair enough. I mean, Dogecoin also going crazy here at 39 cents here, which doesn't sound like a lot, but when you consider the fact that it went down as low as 5 cents or 6 cents and is now up to, well, at one point recently, 44 cents, it's crazy just to see that come into play. And again, the people who get all up in arms about is crypto, it's not worth anything. It's not real money. It's not, I mean, to be fair, anything that is valued at a certain place in a marketplace is worth what people are willing to pay for it. That is, you ask why is something worth a certain amount? It's because that's why people pay for it, right? Sometimes people will complain about certain prices, but prices in free markets are priced based on what people are willing to pay for it. And crypto, whether you like it or dislike it, and that may change, you may think, oh, that's not always going to be the case, but for now, it is clear people want crypto. They want the technology. They want the idea of a sound money storage. I mean, really, I do think gold is the ultimate sound money storage, but it seems crypto is rising in popularity once again and has been doing so for like the last decade.
Exactly. Yeah, I think you're right with that. So I think it will be better alternative to gold. So I think there is value in there. There is a serious value in there because there is limited number. It's not really the same as the currencies or the usual currency that they print now and then. So there is a serious value. So I think, unfortunately, there is a lot of them. But if maybe you can just pick 10 of them, I think, they're going to last very, very long. So, and Bitcoin has been here for quite some time. So even though it's not really older than what we know as currencies, but they've been here for more than maybe 14, 15 years now, if I'm not wrong. So it's very long.
Well, and there's been some interesting things over time that have also showed value to Bitcoin. A quick example, and I don't know this firsthand, but Kinza, where you are, you might be more familiar with this. Rapid devaluation of currency, where we've seen in all parts of the world, right? You've seen in Turkey, for example, or in parts of Africa, where currency has been hyperinflated, right? Venezuela, places where these hyperinflation events have happened, people not only want Bitcoin for a fun thing, but rather a way to not watch their value of money drop so quickly. And that sounds, it's a little bit tongue in cheek because Bitcoin also can drop very quickly in value. But, you know, it's almost like if you're holding fiat currency and it gives you a tremendous risk too, you might as well put it into something like Bitcoin. And again, I'm not telling people who are listening to go buy Bitcoin. It is a highly risky asset. It can go down tremendously fast, just like it can go up tremendously fast. But I don't know. What are your thoughts on that? Did you think there's any case to be made that there are many parts of the world where they've experienced high levels of inflation that are very painful? They look at Bitcoin differently.
Yes, I think most countries actually they are using Bitcoin, and some countries you might even not think that they are aware of Bitcoin, but yeah, they are using Bitcoin very much, especially when their currency worth less. So it's better than gold. It's easy to access than gold. You can just use your smartphone.
And it can
So
be
it's
used
easy.
online
It's
as
way
opposed
too
to gold.
easy, and I know even here in South Africa, you can easily buy some stuff at some other shops with coins, actually, with Bitcoin. But it's not really popular yet, but you can see that they're trying to push that.
Very interesting. Very interesting. Yeah, no, it's one of those things. I think it slowly gets more adopted, but I think another big use case for cryptocurrency is some of the places outside of the United States that have experienced painful levels of inflation. They look at gold and
Mm,
crypto a little bit differently than Americans do. Americans, everybody who I know that is looking at Bitcoin, it's like this for fun, double your money. Oh my goodness,
mm,
way. But in other places, there's sometimes a serious use case for something like this that has a finite supply and cannot be inflated away by a government that is potentially recklessly spending or come on hard times. That
mm.
risk can be huge for an individual who has no part in what the government's doing, and yet their value of their currency tanks.
Exactly. Yeah, so yeah, you so true. That is so true. So I think even Africa, as a continent, most countries they use cryptos, even though maybe some countries they might not really regulate it, but it's mostly used. So and other countries, whether it's Asia, South America, and stuff like that, they mostly use it because mostly their government is not performing very well. So that is a quicker alternative. So it's quite easy.
Yeah, really, really interesting. And I mean, again, Bitcoin nearing 100,000. It's hard not to feel a little bit like, okay, you can kind of see the bull case. And I have to come clean. I've not always been a big Bitcoin guy or a big believer in Bitcoin. And to be completely fair, I don't hold Bitcoin long term at this time. I have a trade on a Bitcoin. I do not have
Mm,
sort of like a big wallet. I don't even own actually any Bitcoin. I only own an ETF that holds Bitcoin for me. So I'm not saying this as I've always believed this or I'm a permanent bull, but it does seem to be times are changing and crypto seems more popular than ever. So really good stuff and very, very interesting. Kenzo, thank you very much for coming on here today for Fundamental Friday. We do this every week, and your session is one that I definitely look forward to for sure. And I'm glad that you came on. Before we let you go, let me just mention to everybody who's watching right now, if you enjoyed Kenzo's commentary, Kenzo puts out some wonderful YouTube content for free to his listeners. If you do not already follow Kenzo on YouTube, I'd ask that you take 2 seconds just to go subscribe to his YouTube channel. We'll be dropping the link to his channel in the chat for everybody who is watching with us live. Please take a second to go do that. It does support, our guests as well as our show. And that is how we sustain this free value content for everyone is we bring on great guests and we want to make sure that they also are able to grow their audience through coming on the show. So thank you very much, Kenzo, for being a part of today's show.
Thank you very much, man, and also your viewers.
All right. Have a good weekend. Next up, we're going to continue the show. And this time around, we've got Forex James coming on to take over here, talk a little charts. Very curious to see what he has to say with some of these moves. I know James has been very bearish on the euro recently. I'm wondering if he's played that. He may or may not be still in some positions or taking profits. One thing that I think is very interesting about the approach used by James is his dollar cost averaging approach to currency trading. I actually love it and have been playing around. Well, actually, I've for years run a grid system that does use some dollar cost averaging approaches. I have a robot that I let run all the time. It is available on our website, by the way. Go to a1trading.com. It's called the Grandmaster EA, something I built in college and have run pretty much all time in multiple years. I've just let it run behind the scenes. It doesn't make quick money or anything, but the concept of dollar cost averaging is a fascinating one. And if you guys would like to hear some dollar cost averaging concepts from James, let's do this. If you guys if you want James to do some dollar cost averaging discussion for a few minutes, type the word or the letters DCA in the chat. Dollar cost averaging is a fascinating concept, especially in Forex, which Forex typically is more of a, wavy market as opposed to indices, commodities, etc. If you guys want some DCA stuff, type DCA in the chat, hit the thumbs up button on the stream. We'll be right back after this quick break. We're going to thank our sponsors to make this show possible. And then James has got you guys covered just after this. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, how is everyone doing? I hope you're all having a great, well, it's actually the end of the week. Yes, I hope you all had a great week. I hope you got some fun things planned for the weekend, or if you're unprofitable, I hope you got some back testing planned. So I see some of you want to go over DCA, so I will happily do that. But just before I do, I'll show you my FX book, just so you know I'm not one of those, one of those influencers or marketers or whatever. So, I could usually refreshing it, just making sure it's not inspect elemented. It's only a new one because I've only just moved to MetaTrader since September. So you can see, 4% this month, 1.69% October, 2.35 in September. So I'm not doing crazy returns, but they are consistent and they are stable. So there you go. So let's get into some dollar cost averaging content. So anyway, sorry, it's already stuttering. The idea of dollar cost averaging is essentially building a position over a period of time. So rather than having, let's say here, I was going to sell euro dollar, rather than having a hard stop loss at the previous high or 20 pips, 50 pips, whatever, however you measure your stop losses, that's essentially not what you do with dollar cost averaging. You will not have a stop loss, and generally you won't have a take profit either. So essentially just adding in, and you can only do this when you have a very strong idea for a trade. So for example, I'm not going to now go into gold and start selling because I don't have a reason to do that. Whereas with euro dollar, it's been a very clear trade, especially since sort of August, September. It's been a brain dead market. Essentially, all you had to do was click sell and you would have made money. And that's what I did. So you can see, what I do essentially is I will sell this market. It doesn't really matter where price is. I don't care, as long as we're not at somewhere crazy low where, I'd be taking profits. As long as it's at a relatively decent price, I'm going to sell that market. So if we look here, we had a sell position that closed out because I re-entered another sell at a slightly better price. Then we sell, take profits. Now, some trades will end up actually being a loss, but the higher positions make up for that loss and give the trade profit. So you can see this is when I started building a much more or a much bigger position. So I sold here, had a pullback, so I sold again. And this actually comes into play with a lot of psychology. I get messages sometimes on stream and private messages as well saying, how do you deal with psychology? And normally I'll say it's a load of rubbish, because the reason you have bad psychology is because you don't know what you're doing. For example, if you're driving a car, you're not going to be worried about, oh no, am I going to turn left or right? No, because you have a map, you know where you're going, you have sat nav, you know the area. It's, you're not going to worry about that. And it's the same as trading. So essentially selling all of these pullbacks. You can see closed out another position here for a loss, but that's so I could then enter at a better price and mitigate some risk. Again here, took a loss, added in another position, and then eventually ended up taking profits. And then again, you can see I did the same thing down here, actually, when I was in the back of the stream or waiting to come on stream. Took some small trades here, just scalps. I'll show you one more example, and this one will be quite quick, and then we'll go into some charts. Let me just find it here. Where is it? Give me a second. It might not be on there. Let's go New Zealand, US dollar. Oh, it must be. Am I being blind? I can't find it here. I'll just show you on TradingView. You're gonna have to take my word for it that I actually did take the trade. So yeah, same thing here, but this was more of a scale in rather than a DCA, but it's the same idea. Essentially, you have a bias, you take the trade, you scale into the trade, whether it's in positive or negative, and then you continue this run down. Now, as Nick said just before I came on, I've been very bearish on euro dollar for a long time, and that's because I had good reason to. It's not a case of, you know, we've had a 5-minute break of structure or the 1 hour's trend into the downside or whatever. So if we look at what's actually going on with Europe and the US, so this is just a brief breakdown I did this morning. So if we have a look, the euro remains under pressure due to geopolitical concerns such as escalating Ukraine conflict and weaker economic indicators like soft PMI data. Energy costs, especially natural gas, continue to impact the Eurozone, with investors inventories dipping below their 5-year average. This kept Euro USD subdued. Then if we look at the dollar, we've got the US dollar remains strong, supported by robust yields and limited pricing for a December Fed rate cut. The market's focus on geopolitical risks and stable macroeconomic outlook further bolsters the dollar's safe haven status. The dollar DXY trading in the range of 106 to 107. So there you go. I mean, we've been doing this for months. So we built this trade idea. So that's what I'm saying. It's not something I would suggest anyone goes and just starts placing trades just because they want to. If you are going to look into DCA or you are going to place DCA trades, either have a very strict mechanical, systemized, back-tested thing. So it'd be more a case of just capitalizing on something like a quant would do, or you would do it off fundamentals like I do. But you would have to have, like I said, a very strong reason to do it. So the dollar finally broken above 107, which is beautiful news. Let's say euro dollar is going to parity. That's kind of my conviction at the moment. So parity is essentially just the 1 level. So when euro dollar gets to 1, that essentially means 1 euro is equal to $1 and vice versa. So let's see on the daily chart. There was a report, I think it was Morgan Stanley or Goldman Sachs, it was one of the two. They said that we could see the 0.95 level get hit on euro dollar, which was the previous low over here from September 2022. So don't start counting out euro dollar just because it's at a low price. It's a case of it's at a low price because it deserves to be there. So essentially what I'm doing on euro dollar is waiting for any type of pullback I can get, and then I'll just keep selling because there is no supportive data. There's no reason anyone should buy the euro right now. Dollar should keep flying. Yes, I don't see anything standing in the way of the dollar, other than sort of natural pullbacks. We've just broken a key level, so we might see a pullback here, whether it's just a retest 107 or a slightly deeper pullback. But overall, yeah, I stay bullish on the dollar. Who is playing with the emojis? I've got no idea what you're talking about. So gold. Yesterday on gold, I was saying I was looking to go short, and that was essentially just from price action. Now, I didn't do that because, as I said, it's not my favorite way to trade. I normally like to trade with fundamentals. This trade didn't have any fundamentals really behind it. It was, again, just a price action trade. So luckily, didn't take it, avoided a loss. And to be honest, I don't think I will be taking gold. So it's kind of just sat on the sidelines collecting dust. Did you manually write the comments on the dollar chart? I did. Actually, I need to do them for today as well for today's news. But yeah, every news release I get, or every news release that happens, I'll update this. I'll add a new annotation. And again, actually, this is what contributed to me being so bearish on Eurodollar. When you start mapping out data, you can see how the dollar's reacting to that data. You can look back and say, okay, well, we had this 50 basis point cut. Nothing really happened. Then inflation, inflation actually stayed the same. But then we had a really good NFP. We had low unemployment, or less than previous unemployment. And then we can start saying, the Fed might not cut another 50 basis points if we continue to see the labor market improving. So you can start building the picture from there. So that's why I do this. It's just so I can have a visual representation of data and what the dollar's doing in reply to that data. So yeah, that's about it really in terms of what's going on in my head. Pound dollar pullback. Let's have a look. So you are looking at 1.284. I think you're aiming a little bit high for that, to be honest. Obviously, eventually the market will get there. In the short term, I don't see any reason for it to. You'd need significant dollar weakness really to drive a move up to there. So I would still be looking for pullbacks, but I would lower your expectations in terms of where that pullback will be to. So I'd be more looking towards short-term or lower time frame structure, just levels of support, resistance, whatever else. Once we get there, add into a sell. Obviously, that's not advice. I'm not telling you to do that. I'm just saying that's what I would do. Hi, James. Do you anticipate Euro and GBP strength? Not really, no. The Euro has nothing supportive. The pound could do, depending on the Bank of England movements. But for right now, I don't really see anything worthy of buying. It's essentially just dollar season. I think the majority of money being made in the markets right now is from buying the dollar, selling other G10 currencies. Talk about gold. I've already talked about gold. There's nothing to do on gold. It's very boring right now. Technically, it looks great to go short, but there's nothing in terms of a fundamental trade here. There's nothing to drive it, in my opinion. Do you DC on the funded account? No, I don't. I DC on personal account. I wouldn't risk it on a funded account because prop firms will give any reason, they'll take any reason they can to ban the account, whether you don't use a stop loss or you over risk, whatever it may be. I don't trust prop firms with that. What do you think about Australian dollar, US dollar short? That's as simple as that. Doesn't matter what price is doing right now. I would go short. The difference is I like the Australian dollar more than the pound and the euro. So if you're looking to capitalize on dollar strength, I would think that, euro dollar, pound dollar are the best ways to do that. And maybe dollar yen, but I'm not a fan of the yen right now. What's your thoughts on DE40 and the UK 100? Betterment, we've already done euro dollar. We went quite in detail euro dollar. I rewind to the start of my segment, you'll see it. So DAX and UK 100. So UK 100, I hate it. I will always say it's a horrible market. There's nothing to do here. It's just a range-bound, horrible, sluggish market. It's the epitome of the UK in a chart. It's disgusting. I'm not a fan. I'm sorry, I can't give you any more details on it because there's nothing to do on that chart other than sell resistance, buy support. But yeah, again, even in terms of macros, there's nothing there for me. Don't know what this line's for. However, the DAX is a little different. I quite like the DAX. So let's get rid of that as well. Yeah, I'd quite happily buy the DAX, to be honest. It's very clearly trending to the upside. Do we have a trend line here? Let's see. Yeah, we do. Let's have a look. So you've kind of got two options here, or I've got two options here. We either wait for a bounce off this fib, like we've already had, it's already been done, so we might not get another one, continuation to the upside, or you would want to wait for a deeper pullback into this trend line and then a continuation to the upside. Either way, I'd really be looking to buy. I don't think it's on the edge finder though. Let's have a quick look. No, it's not. Actually, guys, if you want 45% off the edge finder, you can use code ELITE. There's a quick little plug. Not good at the sales talk, but there you go if you want a discount. Trading bonds. No, I don't really trade bonds. Hey, James, any thoughts on dollar CAD? Yep. Yeah, it's setting up quite nicely for a long position, actually. Let's see here. So yeah, I was talking about dollar CAD yesterday, and the next real stopping point I see is the previous sort of major resistance up here, sort of the 1.45603 level. Because if we look at what's going on to the left-hand side of the chart, there isn't really anything to stop price or act as any sort of resistance or structure. So unless the economics change or the macros change, which they haven't, then this market still, to me, looks like this is the next target. Once it reaches here, I'm going to sell. I don't really care what the economics are doing. And again, that when I say sell, it'll be a DCA sell, and I will be selling basically just a psych level or a strong level. And if it doesn't work out, I'll cut losses because I always trade DCA with low risk. So it's no problem if I get one wrong. But as I was saying yesterday, this seems to be a 4-year cycle. So if we look here, this was 2016. And if we look here, it was 2020. And well, we're in 2024 now, and it's still not reached. So maybe by the end of the year, we could reach this level, and that would make this into a 4-year cycle. And then we could sell the top, quote unquote, the top. But we'll see. It depends on what the fundamentals are doing at that time. But yeah, for now, I remain into a long bias. I'd be waiting, or I am waiting really, for a retest of this level. So the previous resistance through here, and then I'll get into a long position. Dollar Swiss, I think it's pretty clear it's a buy at the moment. Just watch out for escalations because it might get a little bit choppy as we see inflow into the dollar and into the Swiss if we do see tension start rising. But for now, excluding that little thing, we might continue to, likely will continue to see this market head to the upside. The problem that I see really is this weekly time frame. And the only reason is because we're coming into this 200 moving average here. I mean, it will probably not happen for another 1 to 2 weeks, but it's still something I'm a bit cautious of. So in terms of swing trades, it's not for me. However, if you are in long positions, I think you're on the right side. New Zealand dollar. Yes, I was in New Zealand dollar shorts. So this is the way that went. I still remain short, again, against all G10 currencies, pound, euro, New Zealand, Australian dollar, all to the downside against the dollar. I'm holding buys in dollar CAD. Good stuff. We've already covered gold as well. Essentially, there's nothing to do on gold. It's kind of just a snooze fest, really. So, yeah, dollar Swiss, we can have a look. Oh, we've just done dollar Swiss. I swear I just saw one that I didn't. Oh, CAD Swiss was the one. I don't really trade CAD Swiss, actually. It does look really nice for a sell on technicals. We're just at this 200 moving average and showing some rejections around there. Let's see if we've got a fib level. We do. We're inside fib. Actually does look really nice, although I'm not too sure on the fundamentals. So let's have a quick look here. So we've got CAD. Canadian dollar benefits from relatively stable energy markets, though broader commodity fluctuations impact its trajectory. CAD's economy is experiencing steady growth, with oil prices providing support. The Swiss franc remains structurally overvalued despite some geopolitical tensions. There's limited indication of further central bank intervention. Interesting. So the Swiss doesn't sound great. So actually, technically it's short, but fundamentally it sounds more long. So this isn't a market I trade because the technicals are essentially reverse of my fundamentals. So if we go into a lower time frame, let's see here. Yeah, I guess I'd be waiting for a pullback somewhere around here. The problem is, I'm not going to start buying into the 200 EMA on the daily. It's just not the way I trade, because it can act as quite a strong dynamic resistance and support. So it's more a case of I'd more watch this one rather than actually take it. But this is the approach I would take if I was going to. Thoughts on dollar THB? I can have a look, but again, it's not something I trade. Do you guys trade this sort of stuff? Do you trade the exotics and the emerging markets? Because I'm quite a bland trader, I guess. It's like a brown piece of bread type trader. I just trade G10 currencies and a couple of commodities, and that's about it. So let's have a look what the weeklies do. I have no idea about the fundamentals for this market, to be quite honest with you. Although I'm going to stick with dollar strength. But yeah, for Thai baht, absolutely no clue. I'm just not super happy with the way the weekly looks. It's Friday, and this weekly candle is very flat to bearish. We've got the daily here that's rejected our 200 EMA. Oops, didn't mean to do that. So yeah, it's kind of a no trade area for me. So sorry about that. There's not anything interesting I can tell you. Oh, and thank you for the insight you gave a couple of weeks ago regarding Euro AUD. It sold off as you indicated. You are more than welcome. I will always provide the best I can. It may be wrong at times, but I'll always tell you, what I can do. So this was the trade that I think 704 woman, I'm going to assume you're a she, is referring to. I told you guys about this Morgan Stanley position, maybe a week or two ago. And this is how it's developed. I'm not in this trade, just for clarity, but it's a trade I showed. It's still on its way to the downside, so I am looking maybe to get in, just not right now. So essentially what I'd wait to do is for a pullback on the H4, as we're at quite a nice level of support here, showing some sort of rejection, with the previous H4 candle closing, I think it's a doji is what people call it. So yeah, I'd be waiting now for a pullback on the H4 to get in short. Essentially, buy the dollar, sell the euro, and you'll be completely fine. Whether it's the euro Australian, euro dollar, euro pound, doesn't matter. It's all selling off. What's your trading style and strategy? I have 3 strategies. Booyah. So if you go back to the start of my segment, you'll see me talk about the way I trade DCA, which is dollar cost averaging. I do swing trades, which is essentially just waiting for macros and technicals. So I wait for a pullback into a larger trend. So if it's bullish or a bullish trend, I'll wait for a bearish pullback and then I'll buy it, and then vice versa. And this is my day trading strategy, which is a little bit more complicated to explain, but essentially just trading pivot points, which are statistical levels from the previous day's moves using RSI and EMAs. Essentially, again, wait for pullbacks within trends. How do your USD NOK position go? Good question. I'm actually out of that trade. I closed it at break even because it wasn't really slowing down. It's when I started turning bullish on the dollar. So I'm still looking to go short on this one because we can see we're at the top of our Bollinger Band. We're seeing rejections to the upside. Problem is the NOK isn't really strong enough to fight the dollar. And if we look at what the dollar's doing, it's on a huge run. So this market right now isn't suitable for me to get in. Maybe in the next 1 to 2 weeks, that might change. But yeah, for now, just watching and waiting. But yeah, no loss, no gain on dollar NOK. Small lot sizes, so how we do it. It's a shame I'm not in this position anymore. I'm kind of sounds really unprofessional, I'll be honest, but kind of regretting exiting this trade. But yeah, just wanted to end the week with a flat portfolio. Don't really like carrying trades over the weekend. It's not my idea of fun. Anyway, guys, let me just check here. How long have I've only been on stream for 15 minutes. Crazy. Feels a bit longer. But yeah, there's no one on after me, so we're not on a time crunch today. So if anyone has got questions, let me know. If not, then I'll find something to yap about for the next 10 to 15 minutes. Cool. Okay, so let me just have a quick look here. Sorry, I'm just reading a message. Time flies when you're having fun. That's very true. So yeah, markets are very, very overextended. I'll just repeat what I said yesterday. Essentially, the problem is that I've seen, well, there's two problems that I've been seeing recently, especially on social media, the retail side of social media. The issue is we're seeing two types of people come out now, and it's the people that say the markets are too extended, we need to sell, which I understand, but it's not a solid way to approach trading. So for example, euro dollar, very, very extended. It's not time to buy. Euro pound, extended, not time to buy. I know we've got all these people trying to counter trade these markets, thinking that they're going to go flying without understanding why the markets are down the way they are. And as I said earlier, when we see euro dollar, the price it's at, it's because that's where it deserves to be at this moment in time. And then we've got the other types of people that are FOMOing into these trades. So we've got, euro dollars dropped. How much has it dropped? A total of almost 8%, which is a big move. It's a big move to have in FX markets, especially this quickly. Really, it's been, it's not been very long. So we see people getting into FOMO trades, buying, selling, going crazy on euro dollar, for example, and they're just losing. They're getting chopped up, and it's just not pretty. So all I'm going to say for you to take into the weekend is don't get FOMO. The trades aren't going anywhere. The fundamentals haven't changed. Euro dollar, New Zealand dollar, pound dollar, even Australian dollar, pretty easy money at the moment. So just be patient. It will come. You exited EU fully? Yes, I'm completely out of all trades. I'm flat for now. Can you show us a recent scalp trade you took and the thought process behind it? Well, yes and no. So I don't actually scalp. I don't come into the market saying I'm going to scalp euro dollar. I'm going to take euro dollar because it's the only asset I've been trading recently. So if we look here, essentially what we had, can I, hold on, let me find out how to draw on here. Here we go. Fib retracement. Okay. So if we look at what euro dollar was doing here, we had a huge drop. Bearing in mind, I am bearish on euro dollar. So all I'm doing is looking to sell. So any opportunity I see to sell, I will sell. So we had obviously the crazy drop this morning. We had a rise back up. And where was this rise to? Well, as I always tell you, I trade fibs. This was inside the fib between the 61.8 and the 50% retracement. So I took some shorts. I took a short here. This yielded about 0.5%. I was completely fine with that. Took profits. Then I entered twice more. Again here, this again was about 0.5% gain. Completely fine with that. There's no issues there. So when I talk about scalping, I don't actually scalp. It's just if I'm in a DCA trade and I want to get out, then it's fine. I'll just call it a scalp because it's a short time frame. But yeah, I don't have a specific scalping strategy. Trend is your friend. Absolutely, it is. I added a bit to the position again after the news release. Good stuff, Phantom. Talk about COT data and how to apply it in analysis. Sammy, it's good you brought that up. I'm glad you did, because I've just put out a video on my YouTube channel explaining how I use the Edge Finder. So I'll give you a brief look at COT and what it is. So I actually explained this yesterday as well, but the way we look at COT data, it's not a signal. It's not something you would look at and say, okay, they're buying the ZAR, they're selling the CAD. I'm going to go and follow that exact same trade. Because first of all, what you need to know is that COT is lagging. It's 1 week behind. So it's not a case of you've seen a change and that change is going to be reflected on the chart at that same time. So it's more of guidance. It's more of, let's say that you're walking through snow. Rather than walking blindly through the snow, you're following in someone else's footsteps that's already half a mile ahead of you, for example, or, you know, however long, doesn't matter. So that's essentially the way you do it. It gives you that guidance and that sort of direction in the markets. So if we look what this is sort of a longer term view of what COT is doing. So obviously COT is smart money. It's the people sat in the big buildings with hundreds or tens of millions under management. And then we can see the latest weekly COT filing tells you essentially what's changed since last week. So let's look at the pound, for example. What we've got here is long contracts is 120,000. We've got short contracts at 64,000. But the interesting part here is the long and the short contract changes. So we can see they've reduced long contracts and they've also reduced short contracts. However, the long percentage, well, they are long overall because the long percentage is 65.24% compared to the short percentage. So that's essentially what you do. I don't know if this is actually making sense to you guys, but that's basically what it is. But there's full YouTube videos and things about COT data specifically. The way I use it, it's just guidance through the markets, really, to tell you that you're not taking a stupid trade or you're trading against the smart people, and so on. 104 is holding a little weak, a little too well now, though. Let's see if it breaks the next couple of hours. Yeah, Phantom, the thing is with euro dollar, it's not going to be a huge melt to the downside. So we've already really had that. If we look at euro dollar, we've already had these huge moves to the downside. I think now we'll see in a little bit more skepticism in this market, is people just slowing down. We might see some profit taking. So it wouldn't surprise me if we do see more chop in euro dollar. The point really is, though, that the macros remain bearish. So it doesn't matter too much if we do see short-term noise, because it just gives us opportunities to reposition and get higher entries or better entries. Thoughts on Australian dollar, New Zealand? Buy, absolutely buy it. Obviously not right now. Again, you know, when I say things like that, please take it loosely. I'm not here to give you signals. But yeah, I'm looking to buy the Australian dollar, New Zealand. Actually, that's the wrong time frame. So if we look on the daily, we've got a very clear trend line to the upside. We've just broke, well, actually, we're just stuck at this resistance level. So I'm anticipating we have a rejection here. It wouldn't surprise me if we don't, because this market, again, similar to euro dollar, it's essentially just buy. There's not much else to do. So yeah, ideally we'd get some sort of pullback here, and then I can enter into the long side. But yeah, at the moment I don't want to buy into a daily resistance. So yeah, just waiting for that rejection. How do you determine where your stop loss goes? I have, well, with DCA, I don't have a stop loss, so that's an easy answer. With swing trading, it will normally be below previous lows or above previous highs. So for example, here we've got lows just here, so I want to give my stop some I want to give the market some room to breathe, so I'll extend my top stop loss a little bit, also accounted as 200 moving average through here. So it just gives the market that breathing room, so it doesn't, I'm not having a 5 pip stop loss. If I'm day trading, it's a little bit different. So for example, let's say I want to go short here, but I'm not. Let me just make that very clear. But let's just say I am. I'll likely look for the previous level of structure, like with a swing trade, but also with a pivot point. So we can see these are the previous highs that I want to watch out for. And we've also got the daily pivot point here. So my stop will go somewhere around there. But yeah, it can get a bit confusing, especially when I'm trying to explain it to people, because I trade a couple of different ways, and it all depends on what the markets are doing and how I view the markets. So don't get too confused with what I'm trying to tell you here. You have a YouTube channel? Yes, I do. Just type in Forex James. I'll come up. XXS. Cool. Okay. Glad we got that one out of the way. So let's have a look at the dollar. What could the dollar do? So we've broken 107. That's a key a key thing. So I guess the next stop really is sort of, I'm going to say 110, because that's the next quite large psychological level. Then we've got, I guess it's sort of 113, 140. So we'll say there. So we've still got, if we're looking mainly at technicals, we've still got quite a long way to the upside. And again, the macro view that I've got is still intact. So yeah, I think really I'm going to stay on the bullish side. Let's wait to take profits. I normally go for a 1-to-1 or a 1-to-2. So, it's just basically double whatever the stop loss is. Don't overthink that too much. Obviously, it needs to match up with structure as well. So very similar to stop loss. So previous high, previous low, make sure it's a 1-to-2 or a 1-to-1. That's me good to go. Thoughts on pound yen? Interesting one is pound yen, because I've been saying I want to go short, but the problem is the yen didn't really give me an opportunity. So I can't remember when, it was probably 1 or 2 weeks ago in my weekly watch list video, I pointed out pound yen short. Now the problem is with pound yen, or any of the yen pairs really, is the intervention risk that we're facing, and it's also possible that we see a bit of a comeback with the yen. So I'm actually just going to pull up this again. So if we look here, Japanese yen is significantly undervalued according to medium-term models. And when it's medium-term models, it's not my research specifically. This is from bank reports, largely due to wide interest rate differentials. While structural headwinds have lessened, the yen's long-term recovery potential remains, though near-term movements depend on changes in US-Japan yield spreads. So although the yen does look quite weak, and I wouldn't be surprised if it continues to get weaker in the short term, yeah, that, and obviously the intervention risks, it's just not for me. Although if I did take that short, it'd be doing very well, but it's a little bit against my trading plan, really. So yeah, when people ask me about yen, whether it's, again, dollar yen, Swiss yen, pound yen, euro yen, doesn't matter really. Kind of flat, really. I don't really have a bias, to be honest. So yeah, guys, I think I'm going to call it a day there. There's not really anything else that I'm looking at. Yeah, no, there's not. I was just having a quick look on the Edge Finder. So yeah, I'm going to call it a day here. Call it an early Friday. It's 4 p.m. here, so it's basically bedtime. So guys, I hope you have a great weekend. I hope you've all had a good week. I will see you all possibly next week if I'm invited back on, which I hope I am. You've been a great chat as always. Thanks for having me, and I'll see you later.
Attention! The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.